Hello, my name is Kurt Worley. I am the quantitative analyst at FXBootcamp.com. Today is Thursday, December 30th, 2010. This is your New York session video technical briefing. It's a video review of some of the price action we covered in the live class today at FXBootcamp.com during the New York session. Before I get started, I'd like to request your feedback on this video. Please leave a comment when you're done watching, even if you just say hi or thanks. I would really appreciate that. Now I'd like to clarify that the purpose of FX Bootcamp is education. This is not an alert service. The currency coaches do not make trade recommendations, but we do provide real-time technical and fundamental analysis to help you put together your trade plans throughout the day, and we remind everyone that past trading performance does not predict future results. Do not trade money you cannot afford to lose. What you now see is a 15-minute chart for the British pound Swiss franc currency pair as that chart looked at 9 a.m. New York time on GFT's Dealbook 360 trading platform. This pair features the two major currencies which were arguably the main movers during today's London session. The British pound has been broadly weak against multiple currencies since the London Open, and the Swiss franc, that is, the Swiss franc, has rallied against multiple currencies over the same period of time. Now that combination of one relatively weak currency paired with one relatively strong currency fueled this roughly 200 pip drop down on this pair over the course of about 4 hours. In fact, look on the lower right hand portion of this chart, well, this lower portion of the chart here, this swing low, that swing low just above 1.4450, that marks a new all-time high for the Swiss franc against the pound. In other words, a new all-time low for this currency pair. The franc recently printed fresh all-time highs against the dollar and against the euro as well. That was earlier today. Now, if you're looking for reasons why demand for the Swiss franc has accelerated this month, some cite safe haven demand on lingering concerns about the sovereign debt situation in the so-called peripheral Eurozone countries. Now, I've also heard some market chatter recently about the Swiss currency as a sort of proxy for the old German currency. I mentioned that in some of my London Lunch sessions earlier this month, and I see that 3 hours ago, the Trade the News service cited similar chatter amongst FOREX dealers today. Whatever the fundamental case, whatever the case, I can sum up the technical analysis pretty easily here. Like you can see that I've labeled some major moving averages on this chart. The 21 EMA in red is below the 55 EMA in blue, which in turn is below the 200 EMA in green at the top of this chart. That orientation of moving averages, the 21 below the 55, the 55 below the 200, that is the situation on every time frame from this 15-minute chart up through the monthly chart. Yes, the monthly chart. As I've mentioned in several prior video reviews, that orientation of moving averages, again, 21 below the 55, 55 below the 200, that orientation of moving averages says down. So, given all of that, it was certainly reasonable to look for opportunities to short this currency pair. I pointed out to the live class before the end of my London Lunch session today that the 1.4520 area seems to have attracted some attention today. I just identified one swing low and two swing highs, which have formed within just 3 pips of 1.4520 over the past 5 hours. Let's connect those with a horizontal black line. Now that recent price action tells me the 1.4520 area was support earlier, resistance more recently, and could serve as resistance again in the near future. Now if you're looking to short, you'd prefer to do so at resistance, right? Another prospective source of resistance is a Fibonacci retracement level. If I conduct a Fibonacci study of the move down from up here to the fresh all-time low right there, I learned that the 38.2% fib retracement level of that move down is represented by the horizontal bright red line at 1.4527, very, very close to the black line we added just a few minutes ago. Now, based on what I've already discussed, some traders had a case of shorting this pair at or near the top of this previous green candle that I'm now labeling with a blue arrow. Now, whether you took that shot short or were looking for another chance to short later, you should have already envisioned in your mind a scenario for how price action on this pair could unfold over the rest of the session. The maroon colored line on this new chart summarizes the pound Swissy price action since today's London Open. Now, if you're looking for a short somewhere between, say, 1.4520 and 1.4525, you might want to see something unfold like this. A rise back up to that same area I just mentioned. Then for those who aren't short already, look for a short at or near that level. and then hopefully a drop of the pound Swissy back below today's low to fresh new all-time lows, possibly going as far as the weekly S2 pivot point just above a psychological level at 1.44, hopefully reaching that point sometime in the last hour of the European trading day. If you were waiting for another test of the 1.4520 to 25 area, your wait ended exactly 1 hour later. If you took the short trade entry at about the close of this latest green candle that you see on the right-hand portion of this chart, or at the open of the next candle, you could be in at about 1.4523, give or take a couple of pips. Your stop loss could be initially positioned 50 to 70 pips above your entry for catastrophic protection purposes, and your exit strategy might be to close the trade for a modest loss if this pair rises above 1.4550. You see that right there. 1.4550 is a midpoint psychological level occupied by both the 50% fib retracement level of the early move down, the 50% fib represented here by the horizontal lime green line. Also note the 15-minute 55 EMA, that's the downward sloping blue line in the same area. Note that at this point in time, at the close of this latest red candle, you're sitting on a profit of roughly 25 pips after spread. You might have decided at that point to move your stop loss to break even. And a little more than an hour later, the pound Swissy reaches the target we discussed earlier, the weekly S2 pivot point near the psychological level of 1.44. Now, even if you were less than perfect with your entry and exit, that trade was in the ballpark of 100 pips. From there, you can see on the lower right-hand portion of the chart, this pair basically went flat into London close. London close represented here by the bright red vertical line. Again, my name is Kurt Worley, and this has been your New York session video briefing from FXBootcamp.com for Thursday, December 30th.